The European Central Bank has cut its benchmark deposit rate by 25 basis points again, bringing the rate to 2.25%. The move is a reaction to continued global economic turmoil on the back of tariffs, which are creating widespread uncertainty and fears about the Eurozone's economic growth. In contrast, the US Federal Reserve is maintaining a more cautious stance. The Fed has kept its federal fund rate steady between 4.25% and 4.5%, emphasizing a data-driven approach amid persistent inflation concerns. Fed Chair Jerome Powell said on Wednesday that the Fed would wait for more data on the economy's direction before changing rates. He also reiterated the central bank's independence, stating that policy decisions are based on economic indicators, not political pressures. President Donald Trump vocally criticized Powell, expressing frustration over the Fed's reluctance to lower rates. Trump stated that Powell's termination cannot come fast enough, urging the Fed to align its policies more closely with the ECB's approach. The latest rate cut would be the seventh cut for the ECB since June. Now, these divergent monetary policies have notable implications for crypto. Lower interest rates in the Eurozone could be good for cryptos like Bitcoin and others. When rates are lower, fiat is cheaper. And when fiat is cheaper, that has historically been a good time for crypto markets. Meanwhile, the Fed's steady rates could influence crypto valuations differently. So, as the global economy plays a game of tug of war between politics and policy, where does crypto fall? Joining me now is CoinDesk's managing editor for markets, Stephen Alfer, for more. Stephen, hello.
Hi, how are you?
I'm doing all right, given what's going on in the news this morning. Help me make sense of this. It's looking kind of messy out there. What should we be taking away from this?
Well, that's that's a really good question. The ECB cut rates again today, so I'm struck at the kind of the difference in monetary policy between here and across the pond. They're kind of facing a lot of the same inflationary and economic pressures the U.S. is, but the ECB is super easy. I think they've cut rates 7 straight meetings now, and the Fed, as noted by with Jerome Powell's speech yesterday, is actually pretty hawkish. So somebody's making a policy error here. I don't know who it is. That'll be played out. I would note that despite the Fed being kind of the most hawkish of the Western central banks, the U.S. dollar is sliding quite significantly versus Europe. So again, the tariffs are involved here, so it really complicates things. But like I said, somebody's making a policy error here, and we'll see who it is.
Is there an indicator of who might be making the policy error? What are the analysts saying?
It's hard to know the future. I would note that the Fed is actually following kind of a familiar playbook. I think they see the weakness that the tariffs are causing. The Philly Fed index this morning, which was like very much a real-time indicator of what things are happening. It's not a backwards looking. The survey was probably done like last week. Fell off a cliff. Really scary numbers, like COVID type stuff, like March 2020 type stuff. But the Fed often talks hawkish right up to the point where they cut. So this wouldn't be new. I remember in 2007, as the financial world was literally collapsing, the Fed was talking about hiking rates. It inspired, if you remember, Jim Cramer went on CNBC, his famous "they know nothing" rant, like pounding the table, like people are losing their jobs, companies are going out of business, and they're talking about hiking rates. And sure enough, within like a week or two, the Fed was cutting rates like crazy. So it's not unusual for the Fed to talk a hawkish game and then turn around 180 very quickly.
You mentioned COVID there, and I think back to COVID, we saw rate cuts, we saw stimulus, and that only did good things for crypto markets. How are folks expecting markets to react? Are we going to kind of stay in this stagnation, or are we expecting rates to get cut, us to go back to a time that looks kind of similar to COVID and the crypto markets to pick up again?
Yeah, I would note during COVID, we needed the major collapse first before stuff started picking up. So while crypto is down or Bitcoin is down, it hasn't. I wouldn't call it a collapse. It's off whatever 20% from a really kind of a frothy high of 109,000 around the time of the inauguration. So the damage is actually fairly limited, at least in Bitcoin. So we may have to go down a lot further. We spoke with James, or we heard from James Check, who's a kind of a well-followed on-chain analyst this week, and he's looking at like the 65,000 level as triggering the final capitulation. That's kind of the level where he thinks where ETF investors or late investors will. That's where everything kind of goes to break even for people, and they'll kind of have to make that decision to either fish or cut bait, and he believes they'll cut bait. That'll cause the final kind of collapse in the price to who knows where, maybe let's say the $50,000 range, and maybe then the coast will be clear for higher prices.
What should our audience be watching as we wait to get more information out of the Fed and we wait to see how markets react in the short term and long term?
Yeah, for sure. I would say like kind of the real time indicators, like the confidence surveys, like the Philly Fed survey we saw today, the consumer confidence surveys, the ISM reports. We're like in mid-April now, so that they'll start leaking out towards the end of the month, I think. And kind of what the markets do. I mean, the Fed, like I said, they talk a tough game, but ultimately they will respond if stocks continue to kind of like bleed very, very badly here.